Welcome back. We're keeping the market conversations going, and now we're seeing some green on the screen, which is a huge sigh of relief for the bulls. Our next guest weighs in on what lies ahead. We have with us Kenneth Andrade, who's joining in, CIO of Old Bridge AMC. Kenneth, great to have you with us, and personally, I'm in the studio, so that's always fantastic.
It's nice being here.
Is the worst of this tariff storm over? Some people are, calling it something similar to the oil shock of the 70s. There are parallels with the Great Depression because of the tectonic nature of changes. Is the worst over or not yet?
So I guess we got to reconcile with the fact that this is a new way of doing things and just identify as to how this thing moves forward. So in simplistic terms, the countries with a high trade deficit, okay, have nothing to worry about, and countries with a high trade surplus across the world have everything to worry about. And if that's going to be the norm, you position yourself where you want to be, and I think that's the way things will get implemented. But over a period of time, I don't think this is going to be par for course. It will get reconciled. It should logically get reconciled. Otherwise, globally, you'll have to put a lot of manpower in monitoring tariffs. Okay, so if you've lived in the 80s and 90s in India, okay, you know what it's like to have a tariffed economy. So those things may not come back in the proportion that has been talked about, in the sizing that it's been talked about. So let's see how it evolves.
Kenneth, you spend a lot of time in Canada as well.
Kind of.
The 51st state, as President Trump has said. But the basic question which goes to the heart of everything is he and what he's trying to do for real? Or is this, after everything said and done, it'll come down to a negotiating tactic? And because if it is the latter, then it is okay. It's a 10-12 day problem, which will get solved. What is your sense?
Prashant, it's not for me to comment if this is for real or this is not.
But what is your sense as an investor? I'm sure you've thought about this. You have a take.
I mean, it's not the most logical way to reformat an economy. It's not the most logical way to reformat an economy, and not an economy.
No, that we know. But
that's
what is your sense? Is he going to persist?
He will persist for a time, and then after it, I think it'll normalize itself.
But the price damage, that definitely was for real, what we've seen across 3 days. In the financial market impact sense, that was my question as well, that is the worst of that at least over, the worst of the shakeouts?
I mean, I speak for India as a country. I think we're almost done there. Okay. We've normalized in terms of valuations. And I've been saying this, and it's been there in the public domain, that the financials in India are probably the best that there is. In no way is our competitiveness actually diminished globally. Okay, and we just have to recalibrate our stance in the global environment and just move forward.
All right. Hi, Kenneth. Good to have you in the studio. Well, a couple of questions here. From an Indian investor perspective, has the time come to increase your equity allocation in comparison to what you were doing, given the fall, given the uncertainty? Point number one. Point number two is, since you briefly spoke about financials, what do you like out there? And as you said, that's reasonably insulated from what's going on the globe. Both those two. Allocation to equities as well as what you like from financials.
So if you look at equities on a one-year basis, you're at low single-digit kind of returns. If you look at it on a 2-year basis, it's higher at about 20% return, and if you look at it on a 3-year basis, it's about 12% return.
Yeah.
So you're already there. So to look at the template from here into the next 3 or 4 years around that 3-year return matrix, I think if that's your expectation level, the numbers are there. Anything lower, obviously, your return expectation should be higher, or your returns will be higher over a period of time. So from an equity investor point of view, I think the valuation risk that was there and the hype was there in some of those businesses, a lot of that has been corrected and it's been normalized.
Okay.
So today it's an okay time to invest, not the best time. I can't say there is deep value in the marketplace. I don't think it will come, given where corporate balance sheets and the solvency is. I don't think that's going to be...
so it's a good time to allocate more equities.
Yeah. What you've been doing so far, I think it's an ongoing process.
And the return expectation that you said should be around 12%. That's realistic to keep.
So the last 3 years, today with all the correction, your returns are 12%. So going forward into the next 3 years or 5 years, if you can just extrapolate the numbers, you will know what to
12% is not bad,
Not
actually.
too bad.
No, long periods of time, yeah,
Yeah.
absolutely.
Yeah.
Well, give me 12, 15, that's happy.
And the point on financials, you wanted to finish that point as well?
Well, it's an industry where the valuations are great at this point in time. Okay, they're struggling with some operational issues that are there. I won't say operational issues. Some category, some part of the entire economy is struggling, and growth is not at its peak. So you got valuation comfort. You just have to wait for the cyclicality to play out, and this business will also reverse itself.
You want to give us a sneak peek with what PSUs, NBFCs, large private banks?
So they're all different categories out there. NBFC is probably one segment of the market, which is microfinance, and some part of private banks have extreme amount of valuation comfort, but obviously there are risks that are there on the business model. Private sector banks have normalized. They're waiting for growth to come back. I think 27 and 28 should be good years for some of these businesses. And public sector banks, I think they will give you market returns or near about where market returns are. There's actually not much to choose between the lot.
So, Kenneth, sectorally, what do you like? I mean, banking, financials, you already said. You used to like agri as a space. What else? I mean, segments, sub-segments. I mean, just give us a flavor of what.
So, from a valuation standpoint, I don't think anything is sticking out. Okay, everything is corrected. Everything seems to be right there. What we had talked about some time back, and that reflects as some part of our portfolio, which are companies that have put in a large part of expansions and capital on the ground, and are looking at expansion in the international marketplace. Okay, pharma is our largest exposure out there. We got one aviation business which is expanding rapidly as far as the expansion process goes. We got a little bit of metals. Little bit of metals, about 10% metals, and IT is there. So that's essentially where our
pharma, aviation, metals, and IT.
Yes.
That's also hugely global facing. Are you kind of worried? Would you be tinkering around at all with that? Because we don't know pharma, US tariffs, eventually what happens. Metals, again, it's sort of globally linked.
So like I said, anything that's got to do with the tariffing of some of these companies or these industries doesn't diminish our competitiveness. See, we are at the bottom end of the entire value chain in terms of bringing cost-effective products to the marketplace. There is inflation that is there. We'll have to see how that inflation plays out for the customer, who's going to pick up some part of it all, and that's a readjustment phase. But and that also doesn't diminish the market opportunity out there. Look, pharmaceuticals is going to see a patent peak, which is almost 3x the size that you saw in 2015. So from an opportunity size, nothing diminishes the opportunity size.
A patent peak?
Yes.
Which is going to be 3x of what we saw in 2015.
So
that's
from the numbers that we have, it was about $111 billion up to 2015, and now incrementally it's going up to almost 3x of that number into 2035. A lot of that is what the Indian companies have invested in, and not just the Indian companies globally have invested in terms of genericizing that product line. So the opportunity size is not diminished, our competitors are not diminished, but there will be changes in business model to address that.
Okay.
On the agri side, Kenneth, anything do you have exposure or you kind of?
No, we don't have a fixed view on that. There is some elements of those companies that are doing well. It's a very domestic driven economy. That part of the economy has also seen some part of growth numbers that are there, but it's left to individual business models. Category wise, I don't think it's any company is looking at a significant amount of expansion in their product in the macros out there.
All right, we briefly touched upon Dawa. Let's talk about Daru as well. That's something that you have liked in the past. Personally, I'm on Lent, so I'm totally clean. But otherwise, you have spoken about this premiumization, and I'm also looking at the input costs for these alcohol companies have cooled off. You believe there's still a long runway there for these alcohol companies? And if you could name a couple of them that you'll have in your fund.
So we just have one holding in terms of Radico at this point in time, and that's been there for a long period of time in our various avatars that are there. So that continues to hold out there, and it's a very strong product line. And from whatever I get in the marketplace or whatever channel checks we've done, the market is still short supplied in the premium end category. It's not just one company; it's just all companies that are there. It's also a market that's getting significantly overcrowded. Indian entrepreneurs have significantly invested in what they call single malts. Okay, but when it gets crowded out, obviously there's some medium term to long term price destruction. So companies have to hold that. Okay, so I think that's where that's our view on it. Nothing to worry about really, except for valuations are extremely expensive out there.
Kushi or dam, whatever it is.
It's a good discussion to have. We have a midweek holiday coming up.
Yeah, he never leaves that.
No, I'm on a break.
Wait until Easter. Okay, all right, Kenneth. Thank you so much for joining in. Really valuable inputs.
Thank you very
Really
much.
appreciate it. Thank you. But